Well, that brings us to our top story. Markets are down this morning, as we just saw, as investors worry once again about international trade. U.S. President Donald Trump says a deal with China has been done, but few details are public at this point. And Trump has vowed to notify trading partners of new tariffs. He made that pledge just last night. Let's talk about it with our featured guest of the morning. She's Lenka Martinek, managing partner at Sustainable Market Strategies and Nordis Capital. She joins us from Montreal right now. Lenka, first of all, good morning, and thank you for being with us. I'll tell viewers the news that investors are trading on now. Donald Trump, who attended an event at the Kennedy Center for the Performing Arts in Washington, D.C. last night, told reporters, quote, "We're going to be sending letters out in about a week and a half, 2 weeks, to countries telling them what the deal is. We're going to send letters out and we're saying, this is the deal, you can take it or leave it," he said. And so once again, like markets are concerned about tariffs, worried about uncertainty. At what point do you think markets become accustomed to this? We have seen markets classically climbing a wall of worry since April, rising despite headlines just like this.
Yeah, so I think to be honest, I don't believe that we're ever going to get to a point where markets just sort of completely discount the news coming from Trump. We experienced a smaller version of this in his first term, where there's, the news cycle was very much Trump dominated, and markets did have a certain amount of volatility even back then. I would say, obviously, because the scale, what the issues at stake today being trade related, make that volatility in place much higher. What do you do with that as an investor? In our shop, what we have kind of gone back and said, okay, there's, going back to January, February, we had the idea that we don't know what the news flow is going to be, but, we can make sort of a baseline underlying assumption that probably the effective average tax rate is going to be around 10%. That's an increase from about 4% today. And so what do you do with that if you sort of want to look through the volatility? I think you sort of assume then that an average tariff rate of significantly higher than we are today does create the sort of environment for some sort of economic slowdown / recession, and obviously quite a bit higher inflation. And so our tactic has been to sort of say, okay, the tweets and the back and forth will go in all kinds of directions, but let's think through this. Who is going to be tariffed the highest? And what is the potential timeline for that to happen? And so that's how we're approaching it. But I do think, unfortunately, that investors will be sticking around with this volatility for quite some time.
I know you're going to talk to us in our next chat about the rare earths topic. You've got lots of great thoughts there. Let's first of all talk about the U.S.-China trade relationship in terms of the big picture. Trump has said a deal has been done. There are a few details out there. If more details emerge on a settlement between the U.S. and China, is that going to be significantly market positive? Will that ease some investor concerns?
So my view is that I hope that it doesn't, in the sense that, not that I'm looking for the market to go down in any particular form, but I think what this particular episode in the U.S.-China relationship has shown is that actually China has a stronger bargaining position than the U.S. originally thought, and it does come back to this idea about rare earth metals that we're going to discuss later. However, the flip side of that is that the Chinese economy is very weak today. And so we don't know where the playing point is from China. They need to keep their factories open in order to keep employment at some sort of, higher level, or the expectation that workers will stay employed. And so we're seeing that also, you think about the copper mine situation right now, that they're keeping the smelters open just to keep the jobs in place. And so the dynamic that I see happening right now between U.S. and China is, on one side, the U.S. needs these rare earth metals, and on the Chinese side, they really need to keep a very large economy continuing to operate. And they can't do that in the short term anyway, without some sort of reliance on U.S. consumer spending.